Yeah, just a quick first read. Again, trade margins massive, 2.5% there. That's after 1.8% December. We are getting the tariff increases passed on.
So the tariff increases are being passed on to
everyone. They're from the wholesalers to the retailers to the consumers, down the chain.
So that Fed report that came out a couple of weeks ago, the New York Fed, saying roughly 90% of these tariff costs are being borne by the U.S. economy somewhere. You're seeing that in the data.
That is seemingly in the data. Obviously, we have to look at adjustments, and there's all kinds of seasonalities. But on first read, yes. And I guess when we look at what the CPI report for January told us, that was actually more apparent after, we kind of adjusted for, again, the seasonality. There's a big issue here, again, with the data. And you guys have talked about it a lot. But let's push through that and just say at the first blush here, we have a pretty strong service side here, final demand for services. Right. And let's keep in mind, the inflation from energy and food in this is down. We know that's reversing. We also know that's reversing.
We have a new regime of tariffs. And of course, Marsha Gimbel and all that have been on, Evzor Prasad, to have Doug Irwin on from Dartmouth, what a privilege that was. I don't hear any zeitgeist that we're going to reverse the tariff impact pretty soon. Is that what Chairman Powell's hearing? Or Chairman Warsh, for that matter?
Look, again, it has to do with the debate if that's a one-off shift or if this is a continual pressure.
What's your research on this? What's your reading on
this?
It
should be a one-off shift in theory, but I guess the problem is the trickle-through continues to create this inflation expectation de-anchoring, which allows businesses more generally to then eat into savings and credit.
Stop the show. We're going to John B. Taylor, Stanford here right now. I'm going to get you in trouble on this one. Are you suggesting here that we are legitimately de-anchoring the inflation vector of disinflation back 20 years?
No, I'm not saying that it's going to be anything like COVID. We don't have the wage acceleration, the income growth to have a demand pull inflation pulse like we saw in 21, 22. So let's be clear on that. What I am saying is this gives businesses an excuse to defend margins based on something that consumers are aware is going on. So again, it's maybe marginal. It's still not alarming, but it is rising again in December and January data. And let's be clear, we get February CPI before we get the final PCE for January. And this all looks like it's going to firm a firmer PCE. That could be a 0.5 increase for January. And that puts the Fed in a tough spot with labor markets cooling.
So 30 seconds, what do you think the Fed takes from this data point?
Takes it that they have to be patient. They have to be more data reliant. Again, everything they've told us is right. Basically, they are correct to have the stance they have right now.